Right, Harry Watt from Shaw and Partners is joining us with a bit of a threesome when it comes to the retail space. You heard Andrew there just mentioning Premier Investments. Let's go to Harry Watt from Shaw and Partners and Market Matters to find out what he's keeping his eye on. Maybe you could just set the scene for the retailers in general, Harry, because we've been so negative on them as of late.
Good morning, Nadine. Yeah, certainly have been. It's a bit of a tale of two halves for retailers. The unemployment rate is stubbornly low. 3.5% is a really long-term low for that rate in Australia, and that is really supportive of discretionary retail spend. So it should really be supportive of discretionary retailers as well. But on the flip side of that, we've had interest rates going higher, substantially higher in both Australia and the United States. We've had inflation really squeeze household budgets as well. So the disposable income aspect of household budgets has really been squeezed, and that is putting a bit of pressure on retailers. From the market's perspective, though, I think they got a little bit ahead of that and were really negative the retailers for quite a long period of time. We've had to see that short trade unwind a fair bit over the last few months. And we continue to see, well, most discretionary retailers actually outperform it. Coming off the back of this reporting season, we've seen a slight upgrade to numbers in the space, and that's been quite supportive of share prices at the moment. We've had another upgrade today in Premier Investments that no doubt we'll talk about in a moment. But overall, it's a really mixed bag at the moment, and these discretionary retailers have performed quite well despite that negativity out there, Nadine. I think that's a bit of an unwind trade going on at the moment.
Okay, so let's get specific then, because everybody understands retailers, right? And they want to sort of take a look at what's positive out there. And Premier Investments has said that the beginning of this new period has actually gone quite well.
Yeah, definitely. The results today, first half results today, look really good. It looks about a 10% beat in terms of sales. It looks like a small beat in terms of earnings. They've come out with a decent dividend that's flat year on year, but plus they're giving away an extra special dividend for shareholders out there. So that's a little bit of supportive for shareholder returns for Premier shareholders at the moment. Overall, really solid. Their first 7 weeks of trade is up about 7.5% as well. So a decent tailwind there coming into this second half. I think we need to understand what Premier sells and where their sort of target market is. A lot of their brands are, you think Just Jeans, you think Smiggle, those sort of things shouldn't really be as affected by these higher interest rates and that squeeze on household budgets. I think the smaller ticket items haven't quite been affected yet. So, if you think a household budget, they need to go and buy a new couch. That's a big ticket item that needs a lot of capital investment in terms of a weekly day-to-day budget. In terms of going and buying new jeans or buying a couple of new pens from Smiggle, it's a little bit of a different story. So they're not really seeing that effect come through at this stage. And with unemployment where it is, everyone that wants a job's got a job. That's sort of seeing their demand, their pull forward do reasonably well. We've actually seen their inventories fall in this half as well. So overall, I think it's a really solid result. The stock's up marginally today. It's only up about 1%. I thought it would do a little bit better. I do think that maybe analysts were a little bit bullish on Premier heading into this one. So maybe the consensus numbers don't really take into full account how positive the market was on Premier, even though we've just talked about how negative the market's been on retail more generally. But overall, I think it's a really good business. They've got the balance sheet to grow. They're paying a special dividend as well to shareholders. So overall, really good result and really good start to the second half, Nadine.
So I, Harry, have a Myer, I don't know, whatever it is, frequent shopper card. I don't remember what it's called. Myer One, I think it is. I get emails all the time, every day. Everything seems as if it's always on sale, right? But Myer was one of those companies that really surprised to the upside as well. And when it came to reporting season, would you trust the momentum there?
It's interesting on Myer. Premier actually own a fair chunk of Myer stock as well. They own about 22% in Myer, so that's helped Premier in today's result too. But Myer more generally, that was a really difficult business to invest in. Not so long ago, they've had to take on a really big redevelopment of how they run that business, and it seems to be working. Their numbers at the first half result was standout. They paid a special dividend as well, so 4 cents for a dividend and 4 cents for a special. So Myer shareholders picked up almost a 10% yield just at that first half result as well. The momentum into the second half, they had really strong first 7 week sales as well. And once again, it's showing that those more discretionary, more small end sort of ticket items are doing okay. I think we've seen their Myer online store shoot the lights out. I think that's been a real standout for Myer in this turnaround, and they're navigating this sort of leash issue that's really caused them problems over the years really well. So I think they've had some support from big shareholders, Solly Lu being one of them in terms of his Premier holding there. He's come in, he's given them some support, and now the market's starting to back them. In terms of where it's run, I think it has run, pretty substantially. It's up 8 times if you have a look at that chart since its COVID lows. That's a very, very strong
Hmm.
run for Myer. Can keep doing what it's doing? I don't know, but it's one that we'll definitely keep an eye on. One that's probably now a bellwether for how those smaller ticket retailers do from here, Nadine.
Okay, we heard from KMD Brands. We used to call it Kathmandu. Harry, we heard just last week from the company. It appears as if it had a quite a significant turnaround, and I'm not quite sure what they put that down to. What do you think?
Company now, like you said, it used to be called Kathmandu Brands. Kathmandu's no longer the be all and end all for KMD. It's got its surf sort of brands as well, and its shoes brand Obros is what it's called. It's more of a hiking boots brand, which is a bit of interesting sort of sales move from them. But these guys, I think their turnaround has to be hung on the return to travel. So if you think of Kathmandu, you go and buy a new jacket when you go overseas, when you go to a new hike, and you're getting out there and you're being more active, and that's sort of what's helped Kathmandu do quite well. Their sales numbers were really good. The result itself wasn't as good as it could have been. I think a lot of that has to do with the debt that they hold. So their interest expense was higher and higher than the market had expected. So that did weigh on the result a little bit. But underlying that, that business is doing well. If we can see them handle that interest rate sort of issue, that business looks quite cheap to me. It looks very interesting value here around that $1 a share mark. So KMD is one that we've definitely got on our radar. The problem will sort of come is if we do see this massive roll off on discretionary trade. If we do see that household margin get squeezed, then I think they'll have their own headwinds. But in terms of coming out of that cycle and seeing travel return, KMD has been quite leveraged to that and done quite well as a result.
Yeah, okay. So, Harry, really for all of these three retailers, even though you are seeing some value there, they might be on your watch list, but still too early in your view to be allocating toward these discretionary retailers until we have more clarity around rates and their impact on consumer spending.
Definitely the outlook statements for all retailers in this period was it's been quite good for the last 6 months. The 6 months ahead, they're really cautious. I think they're sort of getting down and out in terms of what the economic data is sort of putting forward to them, what these forecasters are coming out and saying that there is some dire times ahead. I think that maybe they're a little bit negative themselves in terms of what the world looks like in 6 months. So there probably is an opportunity there. If you have a look at the Premier result, there's one line in there that I was really interested in, that they've got plenty of cash on their balance sheet. They've got plenty of balance sheet flexibility, and they are looking at M&A opportunities. They will have to be patient. They're probably going to have to be looking at that in 6 months' time, 12 months' time, if this issue revolves and these economic forecasters are proven right. I think they'll be able to pick up some really quality brands on the cheap based on some macro headwinds. So having that balance sheet flexibility will be really key, and I think that's why we own Premier at the moment. We like it, but I think that'll be one that will do quite well if they can find some other retailers quite cheap and continue to pick up stakes like they did in Myer, like they did in Breville as well, Dean.